So I recently had to write an essay on that. And so I looked up the dictionary definitions of capitalism. It's interesting. There are two kinds of definitions. If you look at the Oxford Dictionary, capitalism is essentially defined as not socialism or not communism. It doesn't quite use those words, but it says it's an economic and political system. This is Oxford Dictionary, if I remember correctly, in which private ownership controls trade and industry rather than the state. So it's about ownership of trade and industry. But how do you have industry, which consists of corporations in the modern world? And how do you have trade without a legal system? It's blind to that. Who makes the rules? Where are the courts? Who enforces contracts? Who puts in, the rules of market? It ignores that. So it just talks about who owns. Even if you privatize something, well, now what? You privatize an essential service. Is that necessarily good? Who makes sure that, the privatized health or education or other things in capitalist economies, such as the US, actually work for society or are even efficient, especially when you talk or even when you privatize defense, etc. So it's not about ownership, it's about a system, okay? Now, the other definition of capitalism, and this one says political system, so it kind of seems it's also blind to whether it's democracy or not, because now we have what? Chinese capitalism? People attach all kinds of labels to capitalism. Now, the definition in Merriam-Webster dictionary, again, an online dictionary, that's what you'd find if you look it up, is not about whether it's socialism or communism, and not that is equal capitalism, but is defined by corporations, by markets, free markets, prices, all these things. And so there's private ownership, there's for-profit corporation now, there's markets, there's prices, and that's how allocations are determined. So it's about the kind of what we teach in Econ 1. And that's another definition of capitalism, where this is a system where allocations are determined. Now, the capitalism that we have grown to have in the 70s, 80s especially, I call it, but actually, in the last century, increasingly or more, is what I call financialized capitalism. So I call it financialized capitalism because it has significant role for financial flows, global financial flows, and financialized metrics and financialized governance, corporate governance. So one thing important to understand, which economists are not understanding, is the concept of the corporation. The corporation is not a set of assets owned by shareholders, like in the simple-minded models that we have. It is not also a nexus of contracts, like some economists like to think about it, trivializing, therefore, the separateness of the corporation. The corporations are legal people enabled by legal systems. They're incorporated in a jurisdiction, they operate across jurisdictions, and they must obey the law as legal people. And that has been an invention in its modern form, going back to Netherlands and the Dutch East India, and followed a little bit later by the British East India. And they were government-like chartered private entities. And the key about them, if you read the important literature in legal scholarship, is that the separateness of that, which means that the assets of the corporations are shielded from its own owners of the shares. They're not owners of the assets legally or conceptually, and you cannot replicate that separateness, that asset shielding, the fact that the corporation is itself protected, unlike a partnership, from the creditors of the shareholders. You can't replicate that with a set of contracts into perpetuity, or it's too complicated to do. So the separateness of the corporation is hugely important. It's important for the good, and it's important for the problems. It's important for the good because it enables the corporation to sign contracts, long-term contracts, to fund long-term investments, and to scale up a lot of production to gather money with limited liability from many sources. Shares can be traded in exchanges, so it creates, risk sharing and all this kind of stuff. But it also reduces the incentives for any kind of accountability, and it creates enormous governance problems in institutions that are oftentimes the size of nation states and are as complicated and as important and as political as nation states. So in the global economy, corporations have to be viewed not as economic players in our markets, but as John Mickler says in the book about the political power of global corporations, as political players. And they often work with their home nations, and they must be understood as players in the global geopolitics. So they're tied to home states. They're considered national champions, sometimes the big ones, and they don't play in markets, they make markets, if you look at Amazon or some of the big ones. So we have to understand corporations a bit differently and understand that they impact the politics, and by now they have overtaken and overwhelmed democracies, which is why we have an intertwined crisis, a completely intertwined crisis of both capitalism and democracy. Democracies cannot deliver to their citizens anymore, and that's part of why you have an erosion of democracy. And again, everybody has narratives on it. So when we get to why we're here, it's going to be all about discursive power and narratives.